Good afternoon. This is Dividend Coffee, and I've actually kind of got a cold today, so if you excuse my cold, and but it's given me a bit of opportunity to actually look in at my stocks and shares and see how they're doing. And I'm gonna have a drink of coffee right now as I'm doing this as well. And the thing is that I've changed the way I've been. Yeah, I've changed the way I've been actually. If you see me start and stop the video as well, just means that I've been probably having a cough, and I just thought trying my best, not to be listening to this kind of podcast type video. Um, don't think they want to listen to me cough. So anyhow, I've changed my strategy on stocks and shares, and I'm trying another strategy out. And this strategy is high reward, um, but also it's highly risky. So and that's kind of dependent on how you perceive the world, really, whether you think it's risky or not. And in a sense, anything that I do is not truly risky because I um, I don't put an awful lot uh, of money in the stock market. So I put a little tiny bit in, as you can see with this now, and this is I've put in £2,816 and 35 pence, and that's been done basically over around about a year, and so it's just been a trickle of money going in and into the account every so often, and so the goal that I started off with doing this, it was it was a bit of a challenge, really. It was just that I was trying to make enough. I got it with the spoons with a friend, and it was just so that I could have so many coffees free of charge in a year. I thought if I could play the stock market and make enough money to have 52 coffees in a year, that would be absolutely fine. And that was my original goal, and I think I've done pretty well towards that goal, to be completely honest. And so if you just have a look up here, if you look at my max there, and you can see that my total return to date, so that's the actual total return. That means that's not the money that you put in originally, it's money that you've made in profit. So the money I've actually made in profit, the total return, is £202 and 18 pence, which anybody calculating in my local Witherspoons, it varies. The coffee does, and I have one a week, and over 52 weeks. Obviously, Christmas time I don't do it, so probably it's about 45 weeks or something in a year. And on holidays I don't really do it, so go to Witherspoons, so that would be reduced down again. So I don't know exactly how many it is, but basically the £202 and 18 pence should have covered my 52 weeks of free coffees. The truth of the matter is, I just buy the coffee. I just reinvest the money into my stocks and shares ISA, and I don't bother taking it out. And but that was the challenge. That was the goal. I just want to see if it was possible to be actually done, and seemingly it is possible to be done. And but my strategy, what I started off doing, like putting 200 in one share, 200 in another share, 200 in another share, etc. But this new strategy of mine is kind of more dangerous. But hopefully it will benefit with a higher reward. I don't know if it's even going to work, because if you have like lots of them in at about £200, then even if they only make a few pence each, then you're constantly making that few pence each. So this will probably take a bit longer, because the less you have, the longer it is to turn them around and for them to make a profit. When they do make a profit, in theory, they should make an awful lot more money. So we'll see. At the moment, and to do this, I've got one in Rio Tinto now, and it's £1,943. And if you look at my total, in there's 2816. So basically, this is a huge amount of my overall stocks and shares portfolio at the moment. So, in a sense, it's not what I would advise anybody else to do. But from my perspective, Rio Tinto is a company that's it's a mining company. It's absolutely massive. The turnover is in the billions, and it's not going to go under anytime soon. The stock price might fall. Grant you that over maybe a year or 2 year period and come back up. If that's the case, then obviously holding so much in one stock wouldn't be a great thing. But I've also got the concept and the idea is that, unlike what they say on YouTube for you to put stop losses in and all that, because I've got such a small amount of money in, and what I have decided to do is, if it goes below a certain number, then just leave it and wait for it to come back up. And if you have to wait a year, so be it. If I have to wait 5 years, so be it. No big deal for me. This is just a very small amount of money I've got in the stock market. So if I had to wait 5 years for, say, Rio to come back up to this figure, it wouldn't be a massive big issue. Diageo, exactly the same, but I think in future what I'm going to try and do is I'm going to I've got a fairly good understanding of Rio Tinto, how it works, how it's performed in the past, etc., what its finances are, and normally I wouldn't put that amount of money into just one stock on its own. So you really got to understand that one stock before you do that. Anyway, basically, I would just kind of I'm gonna, if it's not, I think about the £500 mark. It seems really sensible. Diageo, like, to be honest, 576 is like really the most you want to put into this, because it's really bottomed out. So it's at its 52-week bottom, basically around about that area. So when a company bottoms out like that, Diageo is a massive big company again, and I can't see it going down too much further. But if a smaller company was to bottom out like that, that's not a great sign, because they just keep on going down and down and down until it reaches zero. So only really with really big companies like Diageo, Unilever, those sort of companies, you could buy the bottom dip. In my view, I wouldn't recommend if anybody else. This is just what I would do, and So I'd buy the bottom dip, but if it was a very small company, I certainly wouldn't. Uh, I there's slightly bit too much risk there. Anyway, so that's how it's going there. I've got Taylor Wimpey, and because I've only got so few now, this video is going to be a lot less than before. I've just bought back into them. I sold them a while ago, made a nice little profit, and I'm buying back in now. And at the moment, as you can see, they're £2.37 down. So let's have a look. They must be hitting near the 113. Yeah, so they're going down quite nicely at the moment. So in a little while, it might be worth um, buying into them. So we'll see. Also, if I felt that there was a company that was really worth buying into, I just transferred a bit more money into trading 212 and buy into that stock. I've done that before, up to around, but I'm told only up to around about £100, but I wouldn't do much more. And so, it's just about watching and seeing if there's a preferably really low dip. The other thing I could do here, if you look at the scenario, I'm £58 up in BP at the moment. It's the £100 there. So in theory, what I could do, I could sell out of BP, or make 62 pence, and I could buy back into Taylor Wimpey at 233 and minus 233, and buy the dip on Taylor Wimpey. So there's one strategy that I could use already. It's available to me right now if I wanted to use that strategy. And but I think I'm just gonna let's have a look. We're on 4 hour. Let's have a look at 1 hour. I'll just have a look, and let's go and have a look at Taylor Wimpey again on a 1 hour, on a 1 minute. Sorry. So we're on a 1 minute now graph, and they're certainly going down, and it's going to hit the 113 mark, and I think maybe 112 would be a great opportunity to buy into this if it goes that low. We'll see how it goes, and I got £194 in there at the moment, so we'll have a think about it. But and what happens if I put in, say, 113? It's got 112 now. If I put in, somebody's bought in, so they're now thinking there's a price to buy into. So some people put 113 as a stop limit, and it's hit that, they've bought in at that limit. So let's just see if it goes below 113 down to 112. So I'll keep an eye on that through today. We're now £2.83 down. And how I think of that, I just think of it as like put a plus sign in front, and when it turns around and comes back up, you're going to be that much ahead. So that's how I look at it if you buy the dip. So that's how I think about buying the dip anyway. Okay, if you've enjoyed this video, at the moment £198 and 16 pence up. So even though these are in the minus figures here, if I was to sell everything now at this point, so if I sold everything, so I made a loss of £21 on Rio, made a loss of £15 on Diageo, made a loss of £2.90 on Taylor Wimpey, made a profit of 45p on BP. The actual figure I would have as profit would be £197 and 16 pence. That's the profit of actually, that's the total return that I've actually made on the stock market to date. So yeah, that's it for now. I just thought I'd do this very quick video and just to show what I'm doing, showing this high risk strategy, and hopefully a high risk reward, but we'll see. Anyway, if you'd like to ring the bell, or if you actually find me, it'll be kind of you'll be very fortunate, because I'm not a massive big YouTuber. So if you actually do find me, you'll be very fortunate and very lucky. So therefore, what I would suggest is that you subscribe to me, and if you wish to. If you don't, that's fine. And I don't make any money out of this anyway, so it's just fun for me. If you subscribe, feel free to subscribe, and then when a new video comes out, I don't know how YouTube does it, but you'll see it straight away. So that's it. That's all I have for today. This is Dividend Coffee, and this is my latest video. Thank you.